live from the NASDAQ market site in Times Square on this Wednesday, October 16th. I'm John Marino with your Global Markets Report, and a good morning to you. U.S. stock futures here are looking up as we approach the midnight deadline to raise the debt ceiling. Earlier this morning, news coming from Washington that the Senate may be nearing a new compromise. Late Tuesday, Fitch Ratings warned it could strip the United States of its top credit rating. Fitch placing the U.S.'s AAA rating on Rating Watch Negative and warned that it could issue a downgrade by the end of the first quarter of 2014. Fitch saying that even if Congress reaches a short-term deal to avoid the default, the budget impasse has undermined confidence in the United States government. Going now to London for the latest on the overseas action, joined at this time by Jonathan Browdy in the Deal's London newsroom. Jonathan.
Yeah, well, all the European markets are down this morning, but not as bad as you expect. I think people have got a bit fed up with waiting for the ups and downs in Washington. The London market, for instance, has actually been buoyed a bit by individual stocks. There was a sale of two small businesses to Warren, well, not that small, businesses to Warren Buffett, to Berkshire Hathaway, by a group called IMI that pushed its price up. It sold the businesses for about $1.1 billion and said it would send all that money back to shareholders.
All right. And some big news coming from London too, including Barclays. Tell us about that.
Well, Barclays compliance director, Hector Sanz, has been forced to take a bit of time out for stress-related reasons. He seems to be quite ill and has been allowed to take some months off. It doesn't seem to have affected Barclays shares, though. They've gone up, while in fact some of the other banks have gone down. I think there's a growing feeling here that stress-related illness is just part of the banker's lot, and it isn't just in London. There's a survey out of Switzerland this morning that says worldwide bankers are getting a lot of flack from customers as well as their bosses, and they're all under pressure.
All right, and finally, you got our take on Asian markets.
Yeah, the Nikkei was up this morning once again on news that on the weakness of the yen, because that helps Japanese exports. The Hang Seng in Hong Kong and Shanghai were both down. Chinese shares have been weaker. That's it really from London over to you in New York.
Thanks very much. A slew of earnings coming out today, including Bank of America this morning. Estimates of 18 cents a share. This time last year, the company posted break-even results, 20 cents a share today, so this was a beat for them. You can read more at the street from our Dan Freed. Also today, IBM will report results after the bell. New York-based tech company seeing consensus expectations of $3.96 a share, up roughly 30 cents a share from what it earned in the same period last year. And eBay stock is already up this morning. Shares are up just 6% so far this year. After the bell today, eBay will report its earnings. The online exchange seeing consensus estimates of 53 cents a share compared to a year ago, where it reported quarterly earnings of 55 cents a share. Check the street's Greg Greenberg at 5 p.m. with more action alerts and updates. Keep an eye on shares of Apple this morning. They are already trading up in pre-market, but the tech giant has reportedly notified two of its suppliers that it is slashing orders for the iPhone 5C in the fourth quarter. That move raising some concerns about demand for the lower cost version of the iPhone, which still may be too expensive. And Twitter has picked a place to nest. The micro-messaging company, which will start its roadshow later this month, has selected the NYSE for its IPO anticipated next month, according to a filing on Tuesday. Our tech editor, Chris Ciaccia, first reported Twitter's decision to list on the big board last month. As part of the filing, Twitter also revealing more financial details. For the third quarter, Twitter said its net loss widened to $64 million. It's nearly triple what it lost in the same period last year. Much of that money went into R&D, sales, and marketing. And when you look at the top line, revenue more than doubled to $169 million. Also, roughly the same growth rate that it saw in the second quarter of this year. Twitter said that more than 70% of ad revenue came from mobile devices in the latest quarter, which was up about 5% from the second quarter. Finally, this morning's action alert is TJX. Our Jim Cramer saying the discount retailer has an opportunity for growth. This coming just 6 days ahead of the company's very first analyst meeting in 2 years. Cramer is buying in. Tons more earnings news today, which we will cover all day and after the bell at the street. I'm John Marino. Have a great day.